Welcome to SheTrades Crypto. Bitcoin has been one of the most powerful wealth-creating assets of the past decade. Early investors who bought and held Bitcoin have seen life-changing returns, with Bitcoin rising more than 18,000% over the last 10 years. But the real question today is not about the past. It's whether Bitcoin can still play a role in helping long-term investors build serious wealth, possibly even retire as multimillionaires. Let's break this down realistically. Bitcoin was introduced in 2008 by its creator, known as Satoshi Nakamoto, as a decentralized digital currency built on blockchain technology. Over time, however, Bitcoin has evolved into something else. Despite its massive market value, Bitcoin is not heavily used for applications like lending or decentralized finance. Instead, investors primarily treat it as digital gold, a scarce store of value in an increasingly inflationary world. Bitcoin's fixed supply of 21 million coins is one of its strongest features. As fiat currencies lose purchasing power over time, assets with limited supply tend to attract long-term demand. This is one of the main reasons Bitcoin's price has risen so dramatically. At the same time, it's important to be honest about the risks. Bitcoin is extremely volatile. Throughout its history, it has regularly fallen 30 to 60% during market corrections, even during broader stock market bull cycles. Investors have never seen Bitcoin through a prolonged, multi-year global recession. That's why Bitcoin should not be the foundation of a retirement plan. Instead, it works best as a supporting asset. Here's where strategy matters. A responsible approach is to treat Bitcoin like a high-growth stock within a diversified portfolio. Rather than betting everything on it, many long-term investors choose to allocate a small percentage, often around 5%, and hold it over many years. Let's look at a realistic example. Suppose an investor gradually builds a $10,000 position in Bitcoin. If Bitcoin were to rise 5,000% over the next 20 years, far less than its growth over the past decade, that investment could grow to roughly $500,000. Meanwhile, the rest of the portfolio continues compounding in more stable assets like equities and index funds. Historically, the S&P 500 has delivered around 8% annually. Bitcoin doesn't replace that, it complements it. Now, here's my analysis. Bitcoin's biggest strength is asymmetric upside. If it succeeds further as digital gold, even a small allocation can materially improve long-term returns. If it fails, a disciplined position size prevents catastrophic losses. The mistake many investors make is chasing short-term price movements instead of focusing on time in the market. Wealth is rarely built through speculation. It's built through patience, consistency, and controlled risk exposure. Bitcoin alone will not guarantee millionaire status, but when used responsibly within a long-term diversified strategy, it can meaningfully increase upside potential. The key is discipline, buying gradually, holding through volatility, and never risking more than you can afford to lose. That's how Bitcoin can contribute to building generational wealth without gambling your financial future. Follow SheTrades Crypto for calm, long-term crypto market insights. Trade smart and manage risk.